Hello students, welcome back to Mastery in Commerce. I hope chapter 1's video you all liked. Now we are moving forward with the chapter 2, theory base of accounting. See, accounting is a very practical concept. We basically maintain the accounts, the assets and liability of a business, the profit and loss of the business. But before doing all those numericals, the theoretical concepts should be clear to you, right? So first of all, let us see what all rules and principles are being followed for the maintenance of accounts, right? So first of all, when you go through the chapter, there is a term used which is GAAP. You need to make a note of it and you have to learn the full form of it because it may come in exams, right? So the full form is generally accepted accounting principles. Now, this term itself explains you that what are the principles followed by accountants all over the world which are generally accepted. So in this chapter we are going to see that what are the basic concepts and principles which are being followed by the accountants, and they give the actual financial position of a company or a business, right? So principles are basically again telling us about concepts and conventions. So concepts you all know that the assumptions and ideas. And what do you mean by conventions? Conventions are the customs or traditions, means whatever is being followed in the past. What is the footpath laid for us on which we walk, right? Customs and traditions which are being followed by from the starting of maintenance of accounts, means on the what basis these are maintained. Now we come to basic accounting concepts which we have to keep in mind and which are a guideline for us to know that what, as an accountant, what I am going to follow if I am appointed as an accountant in a company, what things should be in my mind when I am maintaining the accounts. The first is business entity concept. Business entity concept means business is a separate entity. Separate entity means owner is different and business is different. Okay, so it should not be mixed up with the owner. Whatever transaction owner is doing, owner is going to the market buying vegetables for himself, it needs not to be recorded in the books of accounts of the business. So whatever personal transactions owner is doing, we will not keep a record of it. Personal transactions are not to be recorded. We will only record what transaction is happening relating to the business. Suppose I am buying the raw materials or something for my company, I am doing some cost on production of the product, that those all things will be recording. Now we come to the next concept. These are the concepts basically which we follow whenever we are maintaining the books of account. Now from next chapter we are going to move on of actually maintaining the accounts, but before that these theories are very important for you to learn. Money measurement concept. As the name tells you, learn it this way. The term money is very important. So whenever any transaction is recorded, money is always involved. Okay, so only money transactions are to be recorded. Only money transactions, and also keep in mind that assets or liabilities, whatever we are recording, should be in the currency. Okay, no vague value should be given. Suppose I am buying furniture for my factory. I need a machine for my factory. So I should have an exact value of that furniture or machine. It should not be a vague thing that it might be around 10,000. No, we should have the correct figure of that machine in rupees. 10,400 suppose. Right? So exact money or the cash involved should be recorded. Then going concern concept. Going concern concept you are going to study in business studies also. Let us see now only. Going concern concept is the company goes on forever or the business goes on forever. Goes on forever means, if suppose it is a partnership business, one partner, even when one partner leaves the business is not going to stop. Whatever transactions are being involved, they will continue to go. So members may come and go, but the company goes on forever. That is why it is called going concern, means it keeps on going. Now next is accounting period concept. Accounting period basically refers to a year of maintenance of accounts, right? You might have heard that banks generally have holiday on 1st April. Why? Because they have the closing of that time. So closing refers to the financial period, means generally companies review their accounts and they check the record that in whole year what profit, what loss, whether balance sheet is balanced or not, assets and liabilities are properly costed, depreciation is being given, that you will do in detail. Accounts will be maintained, how financial statements are prepared after 1 year. Those all chapters are going to come in the later classes. But now you need to know that financial period is generally of 1 year. So it depends on company which kind of financial year they want to follow. Few companies follow from January to December and few companies follow from April to March. So it is the will of the company about the management decision what they have decided. Next is cost concept. So cost concept means that everything is to be recorded in original cost. Original cost means, suppose a machine is of 10,000, right? I have paid to the labor to install it 5,000. Okay. Then I have done some arrangement in the my space. So I have purchased some, we can say a table to keep the machine, and that table costed me 1,000. So what will be the total cost of the machine now? It will be 16,000. So it means cost of the machine is not 10,000, it is 16,000. It generally happens with you, right? When in your family, when you go to buy a car may cost you 5 lakh. But when you arrange for some extra kit or some extra things to be fixed in the car, then that amount is also added, right? So generally you might have heard your parents saying that it was a 5 lakh. After everything it costed us around 5 lakh 20,000, right? So they tell the cost of other expenses which are incurred while purchasing an asset. Similarly, the cost concept gives the total money spent on the purchase of the asset. So this thing has to be kept in mind. Not only the market price is to be recorded, but also how much cost is incurred in installing it, bringing it to its original location. Everything has to be recorded, right? Now next we come to the next concept, which is dual aspect concept. Dual aspect means, which is our double entry bookkeeping. Dual aspect means every transaction has double effects, right? Every transaction has double effects. Double effects means what? Suppose I have sold goods, right? Example, sold goods. So when I sell something, what do I get in return? Cash, right? So what has come to me? Cash has come and my stock has reduced, right? Because I have sold a part of my stock to someone. So whenever any transaction is happening, so it affects one side, it will be minus, one side it will be plus. So it is called dual aspect. Now revenue recognition concept. It seems to be a difficult term, but its meaning is quite simple. Revenue, you all know what you earn, right? When you earn something after selling something. So revenue recognition concept means when sale is made, it should be immediately recorded. When sale is made, it should be recorded. Okay, suppose I have sold, for example, I have sold, again I'll take the goods. I have sold goods in October 23 for, let's say, 12,000, right? And I have received money 10,000, but the person is telling me that he would later give me 2,000. Now I will not wait for him to give me later. What I will do? As I have done the transaction, it will be immediately recorded. So recording should be done in October 23 accounts itself, right? Whether he is giving me in March 2024, I will not record it at that time. I will record it immediately when my transaction is taking place. That is called revenue recognition. Means recognize your revenue when you are getting it, right? You will not wait for the future to when you are getting. Now we come to next concept. These all are the principles which are followed by all the accountants, and you have to also keep these things in mind, because in exam you may be given some examples and they may ask you. If you have the knowledge of these principles, then you will not make the mistake. Next is matching concept. Matching concept says that all revenue earned during an accounting year, whether received during that year or not, all cost incurred whether paid during the year or not, should be taken into account. So profit, if earned, recorded. If expecting, then don't record it. Loss, if expecting, then record it. Quite simple. Yes, because why? Because profit we record only when it is originally earned. If I am expecting maybe yes tomorrow I will get 2000 rupees, why will I record it today itself in my accounts? No, I will record the loss. Suppose some person has taken 10,000 from me and that person is having some financial crisis. I have come to know. So I will keep that thing in mind and I will keep that person in my creditors. Means maybe that 10,000 rupees I may not get in this financial year. Okay, these all concepts you are all going to see in your final accounts when you're going to prepare them. For now you should learn that matching concept is that in an accounting year all the cost incurred and all the revenue earned should be taken into account. Now we have very simple term, full disclosure concept. Full disclosure concept is, as the name tells you, everything should be fair. Every detail should be fair. Should be fair. There should be no biasness. Adequate disclosure. There should be adequate disclosure of all the facts. Okay. So, nothing should be hidden. If a business is in loss, it should be disclosed. If a business is earning well, doing well, that also should be disclosed. Now next is consistency concept. Consistency concept is that everything should be consistent. Consistency concept is the accounting policy should be in same. Policies should be same for the year compared. Right? Suppose 2022 I am considering as one method of depreciation. There are different methods of depreciation which you will see later. So same method should be used in next year, so that for me they are same. It should not be different and I can easily compare these 2 years profit with each other. If I am doing it differently, then it will be. Now matching concept, go to it again. Conservatism concept also follows something similar. Profit and loss should match, and while recording them, this has to be kept in view. You have to take this into consideration, right? Next is materiality concept. I hope these concepts are clear to you. You have to once read the concepts written in your book and go through them elaborately. If you have any issue, you are not able to understand any concept, you can send me the mail and I will revert you. Right? So next is materiality concept, which is your 12th concept. Materiality concept says anything which is of material value should be recorded. material value which is going to affect financial decisions, right? So if anything which I see is affecting my stock, anything which is affecting my value of assets or liabilities, fixed asset, current liabilities, those things I have to take into consideration. Next is objectivity concept. Objectivity concept, again the name itself speaks about it, meaning the transaction should be recorded in an objective manner, means it should not be bias or influenced. It should not be influenced by anyone. Whatever it is, it should be recorded in a non-biased way. And document should be there as a proof. Whatever we are recording, we should have a proof of documents with us. It generally happens in a company, the accountant might have, if you will observe around you, generally in companies, audit take place. So what is audit basically? Audit is they come and check whatever accounts we are maintaining, are we keeping the documents as a proof with us? Otherwise, those accountants may be doubted that whether whatever cash transactions are recorded, they are right or not. So this is very important. Now we should see test your understanding 1. I am giving you the answers. Please mark. I am writing the answers on the board. The first answer is accounting period. It is a MCQ. Please mark the correct answer. The second is none of the above. The third answer is going concern, because it is telling us that a business is not affected by the owners. Then fourth is reliability and comparability. Please tick mark the answers in your book. Let us see what are the questions so that the concepts are clear to you. The first one, during the lifetime of an entity, accounting produce financial statements in accordance with what? Basic accounting concept. So the whole accounting concept is based on one accounting period. We do the recording for one complete year. When information about two different enterprises have been presented in a similar manner, the information exhibits the characteristic of what it will be? Comparability, but the option is not given to us, so it is none of the above. Let us come to the next question. A concept that a business enterprise will not be sold or liquidated in future is known as going concern. If you are investing in a company and you are doubtful that it is going to be sold, then why will you invest? You will never give your money. You believe that the company will go on forever, then only you invest in a company. You keep your money in your bank because you know bank is not going to close tomorrow or next month or next year. You know bank is, my money will be safe in bank, right? So it means an entity is safe. It keeps on going. Next, the primary qualities that make accounting information useful for decision making are when you feel it is reliable and it can be easily comparable, right? So this completes your test your understanding part 1. Then we have test your understanding part 2. I am writing the answers over here. Although I need, writing is not necessary. Even if I dictate, you can complete your work. But still, I feel like giving you the correct spellings, right? Now, the first one is recognition of expenses in the same period as associated revenues is called matching concept. So they should match with each other. Second is the accounting concept that refers to the tendency of accountants to resolve uncertainty and doubt in favor of understanding assets and revenues and overstating liabilities and expenses is known as conservatism. Conservatism means you have to keep the loss more into consideration rather than profit. Next, revenue is generally recognized at the point of sale, denotes the concept of revenue realization. Revenue realization. Fourth, we have the dash concept requires that the same accounting method should be used for one accounting period to the, so that is consistency. You have to be consistently working hard. We use this word, right? So consistency is when same pattern is followed. Fifth is the dash concept requires the accounting transaction should be free from the bias of accountants and other. Just now we did it objectivity. So like this MCQs you are going to get, in your exams. So these terms have to be very nicely understood and explained. Now in your book, systems of accounting is given, which is double entry system and single entry system. The double entry system is generally when we are maintaining the books of account as per the rules of the Companies Act. Single entry system is quite incomplete, although yes, few small concerns maintain them, which you will be doing later. But double entry system only we will be following for now. Now in this chapter, the main things which are important are that I like to tell you that need for IFRS is deleted from your book, so no need to prepare it. GST is something which is very newly added. You all know nowadays when you go to the market to purchase some products, then GST is applied. You might, if you observe the bill which is given to you by the shopkeeper, GST is the amount which is added, and GST is different for different products, right? It is on page number 39 of your book. GST is a destination based tax on consumption of goods and services. So GST is different for different products. It is a kind of percentage of the tax which is charged on the cost of the product, and it is given to the government. So it is two types of GST. One is CGST and the other is SGST. C refers to central government, S refers to state government. So both the governments take the tax from you, right? So this has to be taken into consideration when we are fixing the price of a product. So characteristics of service tax, advantages and all, everything is given in your book, and points are also mentioned. So please go through them for the theoretical question. In the next class, I will try to explain you that how the records are actually maintained. If you like this video, then kindly like and subscribe my channel, and wait for the next videos where you will be learning more about the accounting concepts. And very soon I will be starting with the videos of business studies and economics, where you can understand that why we are learning those subjects. Students should not be confused with the subjects like business studies, economics, accounts, that what are these actually, right? So we will meet in the next channel. Please like and share my video if you like it. Bye.